Hello and welcome to this program titled Understanding Foreign Financial Statements. This is another in the 10-minute tips series of recorded programs for credit and collection professionals. My name is Michael Dennis. I'll be the presenter. Let's go ahead and jump in. Introduction. There are any number of factors that complicate the analysis that we need to do of foreign financial statements that we receive from either customers or applicants for open account terms. Some of those factors include, number one, the difficulty in obtaining foreign financial information, either directly from the customer or from third-party sources such as credit reporting agencies. Another factor is that complicates the entire process is different accounting standards and different auditing standards. Another problem with foreign financial statements involves language differences. In other words, they're not always going to be in English, but they are almost always going to be in a currency other than US dollars, meaning that there will be a need for some form of translation of the foreign currency into US dollars. Another significant challenge that complicates the review and understanding of foreign financial statements involves different terminology and definitions that are utilized in foreign financial statements, as well as differences in required disclosures. The timeliness of compiling and sending financial statements is another complicating factor associated with the analysis of foreign financial statements. In the U.S., we're a little bit spoiled because our customers, generally speaking, generate financial statements no less frequently than once a year, and we receive those financial statements fairly promptly when we request them. However, in foreign countries, that is not always the case. What I'm referring to is the potential for a significant time lag between the date of the financial statements and the date that we ultimately receive the financial statements from our foreign customers. When you are reviewing foreign financial statements, you should keep these issues in mind. Foreign financial statements received from customers and applicants are not likely to follow U.S. generally accepted accounting principles. The auditing standards that third parties, such as in the U.S. CPAs, are going to use are going to be different. In addition, the scope of any external audit by a third party, such as a CPA firm, is going to be different than the scope of the audit that would be performed on a similar customer by a U.S. CPA firm. Reporting requirements are going to be different, and the financial reports may look quite different from the types of statements we're used to seeing and reviewing in connection with decisions to extend credit being based on financial statement analysis. Unfortunately, there's no simple or handy way to understand the differences between financial statements prepared using U.S. generally accepted accounting principles and those based on the IFRS standards, which are adopted throughout most of the rest of the world. As noted previously, there can be a long gap of time between the date of the statements and the date that they are presented to you for review by your foreign customers. By the way, in connection with trying to understand the differences between GAAP and IFRS financial statements, you may want to check out the link shown below. You should remember continued. In every case, when you're dealing with foreign financial statements, you're going to need to translate those foreign statements into US dollars. Another challenge with foreign financial statement analysis is that the statements may not include explanatory notes, such as the ones you're accustomed to seeing as part of the full disclosure requirements under US GAAP accounting standards. In some countries, customers do not generate quarterly financial statements because they're not required to generate quarterly financial statements. Some foreign customers will provide convenient translations which unfortunately may or may not be true and correct. For many credit analysts, the challenge involves terminology. Terminology may be different in foreign financial statements, and here's a very simple example. In some financial statements, sales that you would look for on the income statement will be referred to as turnover, and that's a very simple example of some of the many potential changes in terminology that you can see in foreign financial statements. In addition, basic information may be formatted differently. For example, in some countries, current and non-current liabilities are not reported separately. And not surprisingly, from the credit analyst perspective, that makes it somewhat more difficult to do things like calculate a current ratio, or to perform other types of financial analysis that you would normally do in connection with a set of financial statements received from a US-based customer. Financial ratio analysis can be misused by the credit analyst evaluating foreign financial statements, and that misuse is based on the differences in international accounting principles. From time to time, one or more of your customers are going to be in a position where they provide you with financial reports that are reportedly following US GAAP accounting rules. These financial statements are referred to as limited restatements. The problem, from your perspective as a credit analyst evaluating those statements, is the statements themselves may or may not be a true and correct adaptation of US GAAP accounting standards. And in some countries, some customers can have several sets of books and records. The dilemma for you as a creditor evaluating those financial statements is which version of the financial statements you're receiving. Generally speaking, my position is if a customer has more than one set of financial statements, it is likely that they are going to send me the statements that make their company look the most creditworthy. How to obtain foreign financial statements. The good news is that getting financial statements from foreign publicly traded companies is easy. You can request that information directly from the company, from the foreign customer or the foreign applicant company, or you can download foreign financial statements from publicly traded companies from one or more websites, including, very likely, the applicant or the customer's company website. Unfortunately, for the credit department, obtaining financial information from privately held foreign customers or foreign applicant companies is extremely difficult. Why? Well, part of the answer is the simple fact that business norms are going to be different in different countries around the world. It may be the case that in a particular country you're interested in doing business in, the customer or the applicant has no experience in which a creditor company has requested their financial statements. So you may in fact be the first company that's ever asked them for that level of detail, and they may be quite honestly unwilling to share that information with you for any reason. A second part of the answer is, quite honestly, we experience it here in the U.S. When we ask privately held companies in the U.S. to share their financial information, we know that they are reluctant to do so, partly because they have no legal obligation to share their financial information with us. For these reasons, we, credit professionals, need to be prepared for a degree of resistance to any request for financial information from a foreign customer or from a foreign applicant. Additional comments. You should be aware that if you work today with a CPA firm, that firm will be able to assist you in translating and in interpreting or understanding foreign financial statements that you receive. One of the challenges that all of us face in connection with foreign financial statements is trying to decide whether the current foreign exchange rate should be used on all prior year financial statement analysis. In connection with the format differences between US GAAP-based financial statements and foreign IFRS-based financial statements is that some of the format differences are readily overcome because the information that we need is in fact there, it's provided, it's just in a different location. Unfortunately, other formatting differences between GAAP and IFRS statements are problematic, especially or in particular when the information that we're looking for is not provided in the financial statements that we have received. Another challenge that we need to recognize and acknowledge is that foreign financial statements sometimes have limited disclosures, particularly in connection with business segment activities, in connection with fixed asset value, in connection with various types of reserves, as well as depreciation, and in connection with foreign operations. Thank you for your time and attention today. By the way, if you're interested in hearing the entire 1-hour presentation on the topic of understanding foreign financial statements, please contact the Sponsor and Credit Association for more information.